Hey traders, welcome back to Zedar Trades, your home for simple, powerful trading strategies that actually work. Today, I'm going to share with you the exact swing trading strategy I use to catch moves that run for days and bring in serious profits. No guesswork, no overcomplication. If you are ready to level up your trading game, make sure you hit the subscribe button and turn on the bell because I post more proven setups and market breakdowns every week. Alright, let's jump straight into the charts and break this down step by step. First, what is swing trading? Swing trading is a trading style that aims to capture short to medium-term price movement in financial market. Sometimes it can be long, typically holding position for a few days to a few weeks or even months. Unlike day trading, which involves closing position within a single day, or long-term investing, which can span years, swing trading seeks to profit from price swings or fluctuation within a trend. Now, let me take you step to step how I swing trade from monthly time frame to weekly time frame to daily time frame on a chart. Okay, so we are going to start. Let me first clear the chart. So I'm going to start my analysis on a monthly time frame. We on a monthly time frame, and as we can see, the price was in a uptrend. The price is still continuing, but the past 3 months, let's count 1, 2, 3. The past 3 months was inside this big bullish candle. This bullish candle. So what I do, I mark the candle for last month. If I want to hold my trade for this month, I want to mark the candle of last month. Let's say this one, a red one. I take my tool, my horizontal ray. Remember, I'm on trading view. I mark it the same color as the past month, past 1 month. Make sure you mark the high and you name it last monthly high. Last monthly high. Last monthly high. Because it is a bearish candle, I won't call it liquidity. I'm expecting price to grab this low this month. So the low of this month, I call it last month low liquidity. I call it a liquidity because price will come through it this month before going to this another high. So I call it last month low liquidity. Last month low liquidity. If the price was bullish, example, this one, I mark the high and I mark the low. I call this high last month liquidity because the price will grab this high. And if it was a bearish, let's say a bearish candle, like this one around here, or a better bearish candle like this one around here, I call this one last month high and this one last month low liquidity because price will eventually grab this low. I want you to listen step by step. Remember, these four candles, 1, 2, 3, are inside this big one, this large one. Okay, so I don't expect price to grab the low of this. I will still mark this because remember this is gold. I still mark this and call it past three months low. And this one 3 months high. What do you expect price will do after grabbing this low? We will know. So we have past 3 months low, past 3 months high. The past 1, 2, 3, 4 months, 3 months, price has been consolidating around this big monthly candle. Okay, so this month I'm waiting for price to grab this low, but to where? If you want to see where price might go, we look at our left, any red candle, any big red candle, example to the left, this one, I mark it also. I mark this high wick only with white candle, with white line. So in this case, if price decides to break this low, 3-month low, eventually the price will come to this white line. This white line. I'm telling you this for free. This will help you. If you do your analysis, you will see that price always come to the attracted red. If this one is bullish, price will come to this here. Price will come here. Price will come here. So after I make my monthly high, monthly low, for me, I'm expecting price to grab this low this month. Now I go to weekly time frame. I go to weekly time frame. The first thing I want to do on this weekly time frame, I check the past 1 week how the price has been behaving. This candle, last week candle, it was a bullish candle. So I mark the high, I call it weekly high of last week, not this week, weekly high of last week. And then I have this weekly low which I will not mark. It has been grabbed. Remember, this week we were waiting for price to grab this high, but it did not grab this high. Instead, it grabbed this low. To know that sellers have entered the market and are many. So we look at our left, we see where price might go, a red candle, where this price might go. This one, no. This one, no. Remember, we mark the high of the red candle. It is a bearish one. I can see a red candle here, here, which price have never tested. Price have never tested. If price has tested, if price tested this zone, I will not use this line. Okay? I would not use this line. I hope we are together. I can repeat it in another topic, give you the full details of this strategy. So I make this high of this red candle, in which if this price grab this low, remember this is swing trading strategy. If I want to sell, where will I take my take profit? If I want to sell, where would I take my take profit? Okay? So I mark this red candle, a zone of interest, as a support zone, as a support level. We have this support and we have another support here, around here. Okay? So if this price, weekly time frame, on a weekly time frame, if this price decides to grab this last monthly low liquidity, in which eventually price might come to this level, in which I will start looking for buys, or I will take my profit around here and wait and see what price we might do before I take my buy position again. After weekly time frame, I now go to daily time frame. Now, you're on a daily time frame. See how the price has been behaving. If you use your Fibonacci tool retracement, you can see the price retraces around this level and you get a buy position around this level. So for me, I will look at the past 1 day, this one. So I mark the high and I mark the low, this high. I call it daily high, last daily high, and also mark the low. I call it daily low. So I want to ask a question. Will price go and grab this high, or will price go and grab this low? What will price do? And where will I be looking for sales? Okay, the price will be looking to grab this low because we want a bearish move, a big bearish move. But to where? We see at the red, we try to look at the red candle at this side. This, I can't take this level because price already used this zone. Okay, so if price grab this low, where will price be targeting next? Where will price be targeting next? This red has already been used by this one, which price went up and come down to test the zone again. But I can see today price grabbing this low, but to where? Which means this lows will be grabbed, this lows will be grabbed, this lows will be grabbed up to this red, a good support zone. If you can see, this zone has been tested, the price touched this zone, but price might come and test the level again. Price might come and test the level again. If not, we have another red candle here, which price has not tested yet on a daily time frame. So if I'm looking for sales, I'll put my line around here, my white line around here. But this line, if I want to sell around this line, I want to look for confirmation. I can't just sell like that. What will I do with confirmation? I'll go to the lower time frames and try to find confirmation, either imbalances, Fibonacci retracement levels, or a good supply and demand level. So let's go to lower time frames like 4-hour time frame. So you're on a 4-hour time frame. I have marked my line where price might sell, but if you can see, the price continue to push more higher and it has started to drop. So the first thing I do, we have this high, last daily high and last daily low. The first thing I want to confirm, I want to use my Fibonacci retracement tool to find, a good level to sell. You have a Fibonacci retracement tool and price always retraces to this level, which means you have not yet found confirmation to sell around here. No confirmation yet. So I will continue to go to lower time frames like 1 hour. 1 hour time frame. We enter. Still no confirmation here, no imbalance here, no order block around here, which means we will wait on a Fibonacci retracement level before trying to sell. We target where? The daily low, and as a swing trader, we target this last monthly low liquidity. Okay, so if I decide to sell around this level, short position around this level, I will try and put my stop loss to this swing, this one, swing, and take profit to this last month low. And you can decide to hold the trade either in one day, Monday, Tuesday, Wednesday, Thursday to Friday, 1 week before price deciding to come to this level. So guys, this is a simple explanation and this is how I trade. And I have seen I have backtested this strategy and it works. Trust me, it works. So guys, and that's the swing trading strategy I've been using to catch consistent moves in the market. Remember, it's not just about knowing the strategy, it's about practicing it until it becomes second nature. If you have not understand this video, make sure you watch it again and again. If you got value from this video, drop a like so many traders can find it and comment below which part of strategy you are going to try first. And of course, if you haven't yet hit that subscribe button and join the Zedar Trades family, because next week I'm breaking down another setup that could completely change the way you trade. Until then, Trade smart, stay disciplined, and I'll see you in the next video.